Okay. I believe you can see my screen now. Please confirm that you can see my screen or people online. I can't see your screen, please. Great. Thank you. Remember, we bought 90,000 liters from Allahu Petroleum. Now we want to pay Allahu back or want to pay them their money. Different companies have the way in which they approve payment. And in each company, there's what they call payment approval metrics, where from 1 naira to 500,000 can be approved, or from 1 naira to 1 million can be approved by each head of department. But once it exceeds 500,000, they will tell you that it can only be approved by financial controller. Once it gets to 2 million and above, it can only be approved by CFO. Once it gets to 10 million, it can only be approved by CEO. It's a matrix. Let me put it again in writing. It's a matrix. So different companies with different metrics. If your company does not have one, go back and go and consider suggesting one for them. This is how a matrix will look like. It will be written in a documented, in a document that will be signed by a high authority. In some cases, it must be approved. It will be approved by the board in some companies. So they'll tell you that threshold, approved authority. They'll give you something like this. They'll say 1 naira, 1 to say 500, let's say 500K, 501K to, or it can be 550 kobo. So let's say above 500K to to 1 million. So this one is up to, instead of 1 naira, let's just say up to. Above 500K to 1 million. Above 1 million to 10 million. And above 10 million. So they'll tell you who and who can authorize. Up to 500K, they say the head of department can authorize. This one, the financial controller. They can even put there by the side endorsement. That means there's somebody that must be aware at least. Sorry. Endorsement. So the HOD can approve, but the financial controller must endorse. Here, the financial controller or head of treasury. It can't be head of treasury. Let's say maybe none. This is just example. You might not see this every time. This one, FC will endorse, then CFO can approve. This one is even making the FC more powerful. You know what? Let me just remove this endorsement because I'm not thinking quick. So above 10 million, you can say CEO/MD can approve. So you have something like this in organizations. And if your organization doesn't have it, start having that conversation. So that if you see something of 1 million or 1.2 million and the FC is one approving, the CFO did not approve, reject that payment. Don't go with that payment. Was it not last year's training when one of the participants was explaining how somebody got sacked in their office? And what happened? She sent something to her boss. The boss responded okay. And what she wanted from the boss was an approval. She now went ahead to go and make the payment. And the thing backfired. They were now asking the Ogada, why did you make this payment? And I said, it's also person that made the payment too. I didn't ask the lady, why did you make the payment? I sent mail to my Oga, and my Oga said, okay. The Oga said, it's okay, I told you, I didn't tell you approved. Therefore, you are at fault. So all these things are very important. The job of an accountant is quite delicate. And this is true life story. It's not whether I'm fabricating something. He responded okay instead of approved, and there was problem. So the same thing, whoever is processing the payment must check that the approval metrics was diligently applied. Otherwise, don't go ahead with any payment. In our case, let's go back to the support document I projected earlier. This company uses a payment voucher to authorize payment. Some companies may use email. I've seen companies that use email. They'll send email to the CFO or anybody and say, we want to pay this expenditure, look at the invoice attached, and the person will respond approved, and they can now make payment. In some cases, some people will use memo. They'll prepare a memo to request for approval. But in the case of our own hypothetical company, we have a payment voucher. We want to pay for that 90,000 liters that was delivered to us. The invoice amount is this. The WHT is this. The VAT is this. We're assuming that all these are applicable to the transaction so that we can illustrate it as much as possible. This person prepared it. Balogun Ekimi, supply officer. His boss, the head of supply, reviewed it. The CFO endorsed it. Lagata was the CFO. He endorsed it. And the MD, Bala, approved it. You can see how each person played their own part before they brought it to somebody to come and pay. If you are the one making processing payment and they bring this one to you and you can't see MD signature, if you like, go and approve. You are on your own. You are on your own. When we're looking at sales, if you look, the template I sent to you, the process I explained around sales, it connects it to our budget. Companies are supposed to have budget at the beginning of every year. The same thing with your expenditure. This next part I'm projecting should accompany every expenditure. You are supposed to associate that payment you want to make with the budget. You must check whether that payment you want to make can be tied to an approved budget. Otherwise, you may need to get what they call extra budgetary approval. At the beginning of every year, every company must have approved their budget, must have prepared their budget and approved it. Monies will be spent based on that budget. Sales will be driven based on that budget. So they want to pay for diesel. This is the amount budgeted for diesel, 1.2 billion. This is the amount approved, 57 billion. This is the amount previously approved, 120 billion. So the total approved from the beginning of the year to date is 178. It's 178 million rather. So it can fly. It is still within the budget. By the time this total approved spending from year to date is higher than the budget, you may need to seek further approval from higher authority. Most likely, if care is not taken, you might even get approval from the board before you can go ahead with that payment, because you are beginning to spend above your budget. So some companies call this budget control sheet. Some call it budget tracking sheet. Different companies have a name for this, but it must be prepared by somebody, most likely the department that wants to spend the money, and it must be reviewed and checked by somebody in finance. And that's what has happened here, reviewed and checked by the financial controller. Important. So the budget control sheet is attached to the voucher or the memo, as the case may be. And the goods received note showing that we received this item, and the final invoice from the vendor is also attached. So from a process standpoint, all of this make up, in short, sometimes you may need to attach the initial purchase order. So all of these are put together and submitted to the payable officer or whoever is in charge of making payments. It could be treasury. They will pick it up, review the document. If they don't have any issue with it, they process the payment. If they have issue with it, they reject all these documents and tell you to go and update it as appropriate. That's the typical payment process you see in practice. It can be less than this in an organization where there is no much control, or it can be much more than this in an organization where the control is overkilling. But this is a good process that you can make use of in your organization. And when you get this invoice, as whoever is processing it, you must review the invoice. This 53 and 54, add it up on a calculator to ensure that it will give you 57,56,250. Check that the 7.5% of this will give you 4.016. Compute, cast and construct, panel beat the invoice, review it completely until you go ahead, because some honest mistakes can be found on invoices. I've seen it time and time again. That said, let's go to the double entry. Let's go to the double entry. So to the double entry now. We are going to be approaching it through 4 scenarios again, like we did with customer. Remember, what is turning back to you is turning front to another person. That's how business is. Somebody that is your customer, at the other end, is calling you, you are my vendor. That's how it looks. So now you are now dealing with vendor. So those scenarios you dealt with under the customer, they will also put you inside those scenarios when you are dealing with a vendor. So the subtotal of that invoice, let me go back to the invoice, 53,550. 53,550. The VAT was this, and the total is this. Assuming scenario 1, let me copy from what I have here, Control C, scenario 1. When the company, not the customer this time, the company doesn't have obligation to deduct WHT or VAT. That means you pay this full amount to the vendor, full payment. Debit vendor, that's trade payable. And credit bank with the full payment. That's scenario 1. Scenario 2, when the company has an obligation to deduct only WHT. This time, so this time, amount payable will be this, and deduct WHT at 5%, WHT withheld at 5%. So amount payable will be this total invoice minus the WHT that you withheld. To book this, debit trade payable, showing that yes, the guy has settled fully. So you debit it with this full amount of 57. You credit bank with the amount that you paid, 54. Then you credit WHT payable with the amount you withheld. It's payable because you withheld it and you now have an obligation to pay the government. That's for scenario 2. For scenario 3, let's call scenario 3 when the company has obligation to deduct only VAT. So you debit trade payable Some companies have obligation to deduct only VAT, e.g. oil and gas. Banks have also been included. And I think telecommunication companies have also been included. So this time, this is the total invoice minus VAT. Then the remaining credits will go to an account called VAT withholding liability. Take note, this is not output VAT. This is VAT withholding liability. This is not output VAT. Take note. Then scenario 4. This time you have obligation to withhold the 2. You have obligation to withhold both WHT and VAT. So again, trade payable has been fully settled. The guy owes you no more. Trade payable has been fully settled. Then you credit your bank, being the total invoice, which is this, minus VAT, because you withheld VAT, minus the WHT, because you withheld WHT. So this is what you pay. You have withheld VAT, you have withheld WHT. That means the burden to remit to the government is now with you. Therefore, there's a liability that rests with you. So you credit WHT payable for the liability that now rests with you. And you credit VAT withholding for the liability that now rests with you, as far as VAT is concerned. And that marks the 4th scenario. There's another scenario of NCD levy, but I wouldn't like to bring that in. We can always talk about that during the training from next week. So these are the 4 scenarios. Just like you have under vendor, you also have them under customers. At this point, I think I will just pause and let us take questions all the way.